Picture a toll booth on a busy highway. Every car that passes pays a little. Now picture something stranger. This toll booth also owns the patent on the road itself, so it gets paid by every driver. And it gets paid again by whoever built the road. Two checks, same road. That sounds made up, but one quiet company does exactly this. Not with roads, with the world's computer memory. By the end of this video, you'll understand both of its paychecks. You'll see how it sells a real chip, and you'll see how it collects money on memory it never even made. Most people have never heard its name. After today, you won't forget it. And here's the part that trips everyone up. This company does not make memory at all. It doesn't build a single memory chip. Yet it might be the smartest way to own the whole memory boom. I'll show you why. Quick note, I'm not a financial advisor or a government employee. Everything here is for educational purposes only. For your specific situation, always check with a qualified professional. So if it doesn't make memory, what does it sell? And how does it get paid on chips it never touched? Let's start there. Wait, it doesn't even make memory? The company is called Rambus. The ticker is RMBS. And the first thing to know is what it is not. It is not Micron. It is not a memory maker. When AI demand explodes, everyone rushes to the big memory names. That's the crowded trade. Rambus sits one step to the side. Here's what it actually does. Inside every server, memory comes on a small board. That board runs at incredible speed. At those speeds, the data can get messy, so you need a traffic cop, a tiny chip that keeps every signal clean and on time. Rambus builds that traffic cop. The proper name is a registering clock driver. Just think of it as the chip that keeps memory from tripping over itself. Without it, the memory board simply does not work. So Rambus isn't a memory maker, it's the company memory makers lean on, and that's a better seat to sit in. Memory prices crash and spike. They behave like a commodity. The traffic cop does not. It's a specialized part that almost nobody on Earth can build. That's paycheck number one. But selling that chip is only half the story. Paycheck number one, the chip it builds. Let's stay on that first paycheck for a moment, because the position here is rare. On the whole planet, only 3 companies make this traffic cop chip. 3. Their names are Montage, Renesas, and Rambus. That's the entire club. Now, I'll be honest with you. Rambus is the smallest of the 3 by volume, but it plays a very specific game. It builds the high-performance version, the one that goes into AI servers where speed matters most, and the numbers are real. Last quarter, Rambus sold $88 million of these chips. That product revenue was up 15% from a year before, and for the full year, it set a record. Annual product revenue hit $347.8 million. That was up 41% in a single year.
So here's the contrast. Most people chase the memory makers. They ride the boom, then they ride the crash. Smart investors ask a quieter question. Who sells the part that every maker needs every single time? That's paycheck one. But Rambus also gets paid on memory it never manufactured, on chips it never touched. How is that even possible? That's paycheck two, and it's the one printed on the thumbnail. Paycheck two, the royalty that costs nothing. Before I show you that second paycheck, do me one quick favor. Drop a comment right now. When you think about the AI boom, are you buying the famous names like Micron and Nvidia, or are you hunting for the quiet toll booths underneath them? I read every single comment. Okay, here's the second paycheck. Years ago, Rambus invented some of the core ideas behind modern memory, and it patented them. So those ideas are its property. Now follow what that means. When the giant memory makers build their chips, they use those ideas. Micron, SK Hynix, Samsung, the biggest names in memory. And because the ideas belong to Rambus, those giants pay it a royalty, a small cut on the memory they sell. So Rambus gets paid on its own chip, and it gets paid again on their chips. 2 checks, same memory. Now here's the part that earns the thumbnail. Building a chip costs money. You need silicon, factories, and materials. So on the books, that product carries a cost, about $34 million of cost last quarter. But the royalty? Look at the books and there is no cost line for it. None. The ideas is already invented, the patent is already filed, so almost every royalty dollar drops straight to the bottom. That's why we say royalties are nearly pure profit. It's not a slogan, it's right there in the numbers. Last quarter, royalties brought in $69.6 million. That was almost 40% of all revenue, and it helped push the company's gross margin to nearly 80%. Think about that, 80 cents of every dollar. And these royalties aren't a one-time thing. The deal with Micron is locked in through 2029, so this engine keeps running for years. It sounds almost too perfect, which is exactly why we need to talk about the catch most videos skip.
The myth and the honest catch. Let's clear up a myth first. Here's the myth. People say memory is a brutal business, a commodity. Prices swing wildly, so there's no quality company hiding in there. Here's the truth. The makers are commodities. That part is real. But the toll booth that taxes all of them is not. The road floods or the road dries up, the toll booth still collects. Once you see that difference, you're already ahead of most investors. Now the honest catch, because smart people walk in with eyes open. First, those royalties can be lumpy. They actually dipped a little from the year before. Some quarters are softer than others. Second, the customer list is short. A few giant buyers carry a lot of the weight. Third, memory runs in cycles. When supply gets tight, Rambus gets paid per chip, not per price spike, so it doesn't ride a shortage the way a maker does. Fourth, the stock is not cheap. It trades around 70 times earnings. That's a premium price, and it leaves little room for mistakes. And fifth, the company just changed its finance chief this year. Worth watching. None of this breaks the story, but you should know it. A smart investor owns the catch, not just the upside. And there's one more thing, one that a channel called Dividend Hustle has to say out loud, because it changes how you might actually use this stock. The scorecard and the dividend question. Let's put the whole picture on one scorecard. Last quarter, Rambus brought in $180.2 million. That came from 3 streams. $88 million from the chips it builds, $69.6 million from royalties work, and $22.6 million from other licensing work. Its gross margin was nearly 80%. For the full year, it generated $360 million in operating cash, and it sits on about $786 million in cash. That's a strong, clean balance sheet. On top of that, it just launched the industry's fastest controller for the next wave of AI memory. The new standard is called HBM4E. So it isn't resting, it's already building for what comes next. Now, the honest part. If you came here for income, you need to hear this clearly. Rambus does not pay a dividend, not a single penny. It never has. This is a growth and quality story. It is not an income stock. So how should an income investor think about that? You really have 2 choices. You can own Rambus for the business quality, knowing there's no check in the mail. Or if you want this exact paid twice model with a dividend attached, there's another name to study, Qualcomm. Qualcomm sells chips and collects patent royalties, just like Rambus. Its licensing arm earns a margin near 70%. And it pays a dividend that yields about 2.65%. It has raised that dividend 22 years in a row. The catch? Qualcomm is built around phones, not memory, so it's a cousin of this idea, not a twin. Here's the bottom line, and the way I'd want you to remember it. Sell the chip once, collect the royalty forever. That's getting paid twice, and the second time is nearly pure profit. The memory makers are the lottery ticket. The royalty stream is the toll booth, and smart investors would rather own the toll booth. If you know someone who's trying to invest in the AI boom, share this video with them. It could change how they look at the whole memory trade. And tell me in the comments, after seeing both paychecks, would you rather own the quiet toll booth like Rambus or the dividend version like Qualcomm? I genuinely want to know. If you're building income and wealth from your investments and you want to stay ahead of moves like this one, subscribe to this channel. I dig into the businesses most people walk right past. Next, I'm breaking down that Dividend version in full. The company that sells the chip, taxes the patent, and mails you a raise every single year. You won't want to miss it.